Hello, this is Kirill from forexboat.com and welcome back to the course on money management. In today's tutorial, we will summarize the Larry Williams money management method. We'll talk about the advantages, disadvantages, and basically everything that we discussed previously will be summarized. However, before we continue with the tutorial, I'd like to ask you for a quick favor. Now, I know we're not finished with the course yet. However, I would really appreciate if you could spare a minute of your time and leave me a review. It's very easy to leave a review for this course. Just on the main page, go to the top right corner. There's a button there, write a review. If you click that, then this window will pop up. Here, just choose the rating, so the number of stars you think the course deserves. Then maybe type in a short, brief message if you want to, and just click add review. Now, a lot of people don't get to the end of the course, and therefore they don't have this opportunity to leave a review. But at the same time, your reviews are very important, and your feedback basically governs this course. It helps me understand how I went, how you've enjoyed the course, and it also helps other students to assess whether this course is worth their while or not. So I'd really appreciate if you could spend a minute just to do that. And now let's jump straight back into the Larry Williams method summary. Okay, so summarizing the Larry Williams method, let's start talking about the advantages first. The main and the biggest advantage is exponential growth of your balance. The Larry Williams money management method achieves its main goal that it has, and that's converting your linear balance growth into exponential balance growth. So it does that very effectively and very well. That brings us to the second advantage, no limits. You can earn 900% in 12 months. You can even earn 10,900% in 12 months. It's just ridiculous how profitable your system can become if you apply the Larry Williams money management method on top of your normal trading strategy. Another good advantage is that it has an extremely simple formula. You just have to multiply the risk by your equity and divide by the maximum loss per contract that you've experienced in the past. It's very easy to remember, very easy to apply. Now, the disadvantages. It's a very high risk strategy. So from what we've seen, you can earn substantial profits, but also the losses can be very substantial too. The next disadvantage is, of course, the trap, and which causes risk distortion. So traders often employ the Larry Williams method without understanding the risk distortion consequence behind it. And that is in itself a very dangerous aspect of the Larry Williams method. If you understand risk distortion and how that affects your trading strategy, then you can account for it and adjust certain things or change your expectations. But if you don't understand it, and if you don't think about it in advance, you will only notice it when you actually hit this underwater stone. And when traders hit it, it usually hits pretty hard, and a lot of money is lost. So this is something to definitely be aware of when and if you are deciding to use the Larry Williams method. Other risks, they include things like simultaneously open positions. Because you're rapidly growing the volume of your transactions, if you have 2, 3, 4, or 5 positions open at the same time, the effect on your account may be very different to the case if you were using the linear balance growth model. So you have to be careful of this and always calculate your risks depending on how many positions you have open at the time. And consecutive losses can also be quite drastic. So this means that because your volume of transaction grows with balance, if you have several consecutive losses, they won't just be of that original 1 unit or 1 lot volume that you had. They will actually be quite substantial, and you have to make sure that your account can sustain several consecutive losses. So based on your trading history, you need to find out how many consecutive losses you can have maximum and adjust your risk profile accordingly. So that's all for the Larry Williams method. As you can see, it's a great method, but it does have its risks. So the bottom line in terms of when to use the Larry Williams method, I would say that it's not ideal for big balances where you have to trade conservatively and very responsibly. The Larry Williams method works best for low balances. For instance, if you have $100 or $1,000 on your account and you want to rapidly grow your balance, you want to kickstart your balance and turn it into $10,000 or maybe even $100,000. So, and then from there keep on trading with a larger volume. That it works really well in those cases. However, you have to keep in mind that whatever account balance you have using the Larry Williams method, just imagine that you've already lost it. That's the best way of applying the Larry Williams method, so you don't get gray hair, you don't keep waking up at night, because there is a very good chance, very high chance of losing everything you have applying the Larry Williams method. And not because it's a bad method, just because things happen so much faster. So you can earn money very quickly, but you can also lose it very quickly. And a lot of traders are not prepared for that. The psychological effect that this can have on you can be devastating. So once again, low balances and whatever you throw into this kickstarting mechanism called the Larry Williams money management method, just imagine that you've already lost it. And in that case, if you do turn it into $100,000, that'll be great. You'll be just, super happy. If you do lose it, you've been prepared for that. That's my advice to you, and good luck with this. In the next section of the course, we will talk about a more conservative, still amazingly effective method, but a bit more safer method called the Fixed Ratio Money Management Method by Ryan Jones. Don't forget to leave me a review, which will be much appreciated. And I look forward to seeing you in the next section of this course. And until then, happy trading.